Bitcoin sitting at $66,000, but the rest of the altcoin market is looking still pretty bearish. It is red, and the question that many of you may have is, how bad will this crypto correction get? How much lower will we go? When will this price suppression end? And have the high time frame price models, which look at a mostly optimistic viewpoint for Bitcoin, have those failed, or are they still intact? We're going to have a look at that and a whole lot more on today's show. So make sure that you smash the like button, hit the bell notification, and subscribe to the channel. Give the channel a little bit of love over here. Hit the notification bell so that anytime that I do go live at these arbitrary times, like on a Saturday morning, you will be here to receive that alpha and information. So let's get straight into it. And we're going to have a look over here at the Bitcoin stock to flow model, which very simply is one of the most optimistic price models out there for Bitcoin, and indicates that, you know, following that halving cycle, which is going to be ultimately around this area over here, is where you start to see the red dot print, and then you get this massive price appreciation towards the upside. And simply put, what is the stock to flow model? Ultimately, it looks at the flow, or the stock to flow, of Bitcoin over time, meaning how much Bitcoin gets released year after year after year. This is a common model that they look at in things like gold and other hard assets as well. And Bitcoin should officially be have the lowest stock to flow model in the world, meaning that it's the rarest of all the assets out there. And if you have a look over here, it's showing that we should be going right into that major price appreciation very, very soon. But you still have a market that looks like this, creating a lot of confusion out there and scaring a lot of people out of their position. So we're going to have a look at the high time frame overview. Where do we lie within the stock to flow model? And we're going to break down things on a more granular level, as opposed to moon boy targets of $1 million, $450,000. And we're going to get a bit more realistic about things, where the cycle could top out, at what level we'd be looking at. And then we'll also get into the low time frames. And of course, your favorite, the altcoins. You can start dropping those altcoin requests. Also, let me know, where in the world are you guys from? I see greetings from Amsterdam. We have someone over there from Amsterdam. Spam the chat over there. I'd love to know where you guys are from, and hit the like button, and let's get into it. So, ultimately, the stock to flow model is really driven by the halving cycle in Bitcoin. That's what creates that supply shock. That's ultimately what brings that stock to flow ratio down every 4 years, because the mining reward for Bitcoin gets divided in two. So ultimately, the Genesis block, when miners were, mining every 10-minute block, they were receiving 50 Bitcoin as a reward for that. And then consequently, every 4 years, the equations become harder and harder, more complex to solve, and they have to use more and more computational power, more electricity, and stronger graphics cards to ultimately solve for the next block reward, which in 2012 dropped down to 25, 2016 dropped down to 2.5, in 2020 it's now at 6.25. Well, actually in 2024, so we were there. Now we're at 3.125, and the next halving reward is going to be in 2028. And ultimately, this is what drives that stock to flow model, and you can see what the rewards will look like in the future. It's mathematically programmed. This will not change, right? That's the thing with Bitcoin, is it's immutable, it's unchangeable, it's already coded into existence, and that's it. It is what it is. You're not going to change any of that. And consequently, what we can look at over here is the exponential growth versus the logistic growth. And what you're seeing over here also from Plan B is that the adoption of new technology like Bitcoin typically follows one of these S curves, right? Where it gets exponential and then it starts to phase out. And he says it looks like this, like a logistic function, right, on the right. But what most people don't understand is that logistic growth in the first 50%, which is going to be in the yellow square over here, is hyper exponential, very, very rapid towards the upside. And this means that Bitcoin's price must be exponential until you hit that 50% growth. Now, the question remains, where are we within that growth phase? Now, this is a very, very high time frame, not even a multi-decade, but probably a multi-century outlook for Bitcoin. So we're going very, very high time frame today, and then we'll drop onto the low time frames. Well, if you look at the Bitcoin adoption as per the S curve, well, it's around about 5%. Suggesting that there's still a 10x potential before you're hitting that 50% level. And consequently, you should see continued exponential growth for Bitcoin over time. Now, obviously, us viewers or retail, you guys at home, myself included, typically get chopped in and out based on, the ebbs and flows within the market cycle. But you really sometimes have to take a further step back and understand what the technology is. We definitely don't drop the charts. We are looking at the overall trends and governing those uptrends, and we will have our signals when we fully exit the market, and that ultimately allows us to get more Bitcoin over time. I'm just trying to build the fundamental case for why Bitcoin is pretty strong. So if you want to get an idea for how it would potentially start to move towards that 50% level in terms of 50% growth and continue that exponential trajectory, well, you can look at something like this. This is looking at the total global asset value sitting at about 900 trillion, with the biggest being real estate, right? Real estate at 330 trillion. You have bonds at $300 trillion, money at 120 trillion, which we know is all funny money anyway, and paper money, which is hype, which is inflating, right, over time, and consequently depreciating each and every single day. Look at things like the Zimbabwean dollar, look at the Turkish lira, look at currencies like that. Also, if you look at Venezuela, you look at Argentina, you've experienced that hyperinflation, and this is going to typically take place in the majority of countries over time. All these fiat currencies ultimately go to zero. Equities at 115 trillion. Then you have cars and collectibles at 6 trillion, art at 18 trillion, gold at 12 trillion, and Bitcoin only sitting at 1 trillion. So if Bitcoin just steals a little bit of the market share from these various different asset classes, you'll very quickly start to see that adoption growth go from what's currently sitting at about 5% to then 10%, 15, 20, 25, and you can just count it up in multiples. But the first target would be going for gold. So when in doubt, zoom out. That's the first lesson. When in doubt, zoom out. And there's nobody more bullish than someone like Michael Saylor, which we'll get into in just a moment. Now, if you look at real estate, which is the biggest in terms of the global asset value, holding at 330 trillion, it's important to have a look at what real estate is doing in terms of its market cycle, because real estate will drive the overall crypto cycle, right? Crypto will usually move at a higher magnitude compared to what you see something like real estate. And this has been the ultimate guide that we've been looking at for quite a long period of time. And there are other YouTubers who also focus on this. Of course, one that speaks most prominently about this is Jason Pizzino, but it was Phil Anderson who I think created this model. And what the model suggests is that markets move in these 18.6 year cycles, predominantly driven by real estate, which, as you can see over here, we're just leaving this period over here where things start to go full vertical towards the upside, and full vertical is usually unsustainable, and that's that roller coaster ride where things become a whole lot of fun, also known as the winner's curse, where the majority think that they're right and ultimately get wrecked. But timing wise is what we want to have a look at and is important, right? Timing wise, you're looking at some point in 2025 to 2026 where you should see that cycle peak, right? The top of the market cycle for real estate. And that should translate well into crypto as well. So ultimately, you want to time that in terms of an exit. And we're going to get into today's show how you can potentially time that exit. We'll look at one or two models, and then we'll also show you how you can do it for yourself at home without those models. So you can already see that real estate is driving towards the upside, and consequently, the S&P 500 and NASDAQ are pushing up to new all-time highs, pretty much going absolutely parabolic over here. That's the top left and top right chart over there. And consequently, crypto is lagging. So should your faith be shaken in Bitcoin? Well, this was a question that was posed to, of course, Michael Saylor, which is one of the biggest Bitcoin bulls, Michael Saylor of MicroStrategy. And this is ultimately what he had to say. And this is the high time frame thinking that some of you actually need to have when it comes to your HODL position.
Does your faith ever get shaken, especially during these very volatile periods where Bitcoin has had a steep sell-off?
No, in my entire career, I've never seen anything as compelling and unstoppable as Bitcoin. I'm extraordinarily enthusiastic. There are 8 billion people on the planet that need digital property, and Bitcoin is the dominant digital property network. So if you zoom out and you ask the question, how are you going to provide economic prosperity to billions of people at the speed of light over a computer network? There's no better idea than Bitcoin.
Does your faith ever get shaken?
So there we go. That's a little bit of hopium for you guys. Just a little bit of encouragement to zoom out on the higher time frame when things do start to come down. This is currently what the supply looks like in terms of visualization as per blocks. You have exchanges holding about 2 million Bitcoin with the most. You have zombie coins, which are basically coins that have never moved, probably lost coins at 1.7 million. You have Satoshi Nakamoto, the inventor, creator of Bitcoin, which these coins also haven't moved, sitting at 1.25 million coins. And this is out of the 21 million supply. You have 670,000 coins in the ETFs. You have 328,000 coins that were mined last year. You have seized tokens from, which is now in the government's custody. You have coins bought by MicroStrategy, which is around $200,000. And then you have these smaller and smaller amounts that are listed below in the likes of Tesla holding, just around 10,000 coins over there. And then the rest of the coins over here are in circulation, right? This is the amount of coins left to be mined, showing you the scarcity of this asset. And consequently, that's why this model tends to work. But the price targets are vastly incorrect and overly optimistic. And that's something that we have to get real with today. And we're going to have a look at in today's show. So this is currently the distribution of Bitcoin, and what it looks like. 57% is in various different individuals' custody, right? This is split and very, very decentralized across the board, with many, many different market participants, just like me and you, which are holding some of that Bitcoin. Then you have 17.6% loss, obviously diminishing that 21 million supply, meaning that Bitcoin is even more scarce and probably somewhere around that 17 million Bitcoin that's going to ever be in existence. And as you can see over here, these are the corporations, government, coins yet to be mined, and Satoshi's wallet over there. So a very, very interesting outlook if you want to look at how the asset has become decentralized over time. Now, Bitcoin has changed many people's lives. As a result, we've created channels like this where we ultimately teach you how to trade this new asset class. And this is a way for you to get ahead in life. And we've seen a lot of people like this gentleman over here, who's ultimately changed his life 10 years ago. He had absolutely nothing, lost his house, family, everything, drank too much. He even smoked weed. And now you can see his life has changed. 10 years ago,
I didn't have a penny in the bank. Now I'm comfortable, I can retire. 15 years ago, I lost my house, my family, my wife, my daughter. I lost everything. Probably drunk too much, probably did smoke too much weed, everything that you shouldn't do when you're depressed. And I didn't see a way forward. Unfortunately, my mother passed away, a couple of years ago. She was very ill. She made it to 89, so it was expected. But she left me, obviously, a house to sell. And rather than spend it, I invested it in stocks, but I didn't really know what to do. And I found 𝗕𝗬𝗢𝗢𝗍. I've been following you for the last 2 years, and I'm learning all about Bitcoin, and I have invested over half of my savings in. I got in at some good entry points thanks to you, Carl, and now I actually have a future. I've got a lovely house that's paid for. I don't have a mortgage. I've got money in the bank. I can invest. And so I just wanted to share it with the group that, if you're feeling low and you're on your own, to me, I promise you that you can get through it.
So guys, there is an opportunity for each and every single one of you to still join into Crypto School. We'll get into some of those price model targets right after this, so stay tuned until the very end. It's the next tab over there. But you have 18 days, 6 hours left. If you're somebody new to crypto and this is all foreign to you and you don't really understand what you're doing, I highly encourage you to join the Crypto School. Now, this is for the very, very expensive price of free. It's completely free, guys. You don't have to pay 1 single cent. It's been covered by the very generous exchanges that are listed below. The sponsorship partners have sponsored the course for you. It's valued at $3,000, but you don't have to pay 1 single cent. Use the link in the description below. That is obviously while the places are still there. So the sooner you sign up, the better. Put in your email, click sign up. The link is in YouTube below. If you go through here, you'll see Whale School. It's right over there. And then let's get into some of those actual price models. So if you have a look at this, a lot of what the S2F model is based on as well in terms of price targets is to have a look at these rainbow charts. But I tend to believe that the S curve is playing out a lot quicker than what some of these macro analysts and on-chain analysts actually have a look at. And I think that you can use this data set over here to very nicely predict where price may be going. So let's just quickly show you over here. If you have a look at this and you mark off the various different bands, right, you'll notice that we came just shy of the 13th band over here. So the 13th band I can put on and off. There you go. It's the red one. That's in the first cycle. So you can subtract 2, right? And you peaked through that. The next cycle you can see over here, well, you subtract again 2. and ultimately price peak through that. The next cycle, let's subtract how many? 2, and price peak through that level. The next cycle, how many bands do we subtract? Again, 2, and you can say price peaked through that level. So you're subtracting 1 to 2 per cycle to predict where price could potentially go. And if you do it within that regard, that leaves price over here in this current phase with a upper limit of, anyway, this is assuming that it happens towards the end of the year. So let's just quickly reset the zoom and scale it out a little bit. Let's go through. We'll have a look all the way into 2026 as well. But under the assumption that price is going to top out at some point in January, December, at the end of this year, it gives you the upper band limit of about $137,000. And the extreme upper end is going to be at about a $240,000 target. So pretty interesting. I think it's very, very interesting data that you can have a look at over here. I think at the very least, you're going to hit this band 4, right? Band 4. So if I remove band 5 and we just go with the most conservative approach, there you have it. Band 4 is coming in at $136,000 if it does happen in January. If the rally continues for all the way into 2025, well, then maybe you're going to get into that $200,000 target. So you are getting that diminishing return effect within crypto and within the cycles. It's something to consider because you're seeing a lot of hype come back into the market at the moment. And consequently, I don't want you guys to get wrecked, right? I don't want you to get wrecked. I want you to understand the realistic case for Bitcoin and where price may go over time. And this is your risk levels, right? You can see that, you know, most of the parabolic phases tend to happen in that red zone, and we yet to see the red zone, thus indicating that, you know, there is probably a lot more to still go within the cycle. You're currently only printing the yellow dots, which in terms of your risk level is the 0.5 to maybe at a push you can say 0.7, and the market cycles top at 90 to 100 or 0.9 to 100. So a lot to look at. You're getting that mass adoption within the cycle. You have people like Donald Trump now coming in and aggressively rallying up the crypto sphere or the crypto ecosystem to try and obviously gain votes. And this is something that he recently just said. It just came out as of yesterday on one of his rallies. Have a look.
To further secure America's future and create opportunity for young people, I will end Joe Biden's war on crypto, and we will ensure that the future of crypto and the future of Bitcoin will be made in America. We're going to keep it right here, and a lot of it's going to be done right here in Florida. Right?
So there it is, right there in Florida. That's the start over there. Of course, that's one of his top states that vote for him. And if you look over here now, the Oklahoma governor has signed a bill into law exempting Bitcoin miners from sales tax on their electricity bills, thus obviously becoming a lot more crypto friendly. So we're seeing a full 180 turn within the political sphere when it comes to crypto. And the question remains, as 𝗕𝗬𝗕𝗓 says over here, is how long will it be until Trump promises that there will be zero capital gains taxes on crypto? Now, this is the environment that creates, you know, that massive spike within, let's quickly go back to the cycle over here, within that winner's curse phase, right? This is the environment. This is the signs and symptoms, the things that you want to look out for that create that hype that leads into that explosive phase. And you'll have people that are going to be calling for $500,000 to $1 million Bitcoin price by the end of the cycle. But I want you guys at home to remain rational. And again, if you join crypto school, I teach you every single trick in the book that you need to remain rational and to use the signs and symptoms to time where things may be becoming a little bit frothy and you want to start to exit the market. So a lot to look forward to over here. But at the end of the day, this is your situation for price. The fact that in terms of pure technical analysis, we've broken back below the previous week's low is an incredibly bearish sign. Now, you do have support that comes below over here. If I just quickly grab the highlighter, of course, you do have support coming in over there, which not only happens to be the range low, but it lines up with that 21 exponential moving average, which has really governed price towards the upside for the majority of this bull run over here. You can see the recent flush that we had, price wicked directly into that 21 exponential, bouncing price towards the upside. And I said to the whale room community, which is the private Discord, that you know, it's really simple over here. It's better to play a defensive game right now within the market because things are getting a little bit frothy. I'm going to show you a couple of signs and symptoms in the short term of what we're seeing, but you may as well just remain a little bit more defensive until such time as price can break above this level that I labeled the breakout level, meaning you need to see Bitcoin break above $72,000 to $73,000 and close multiple candles there. If you do, you can say, okay, cool, this is trend continuation and price is going to be going higher. But some of the things that we're starting to see in terms of miners increasing their selling, that is, of course, following you know, that halving cycle, which has recently just taken place. Some of them will be looking to lock in their profits. Let's just quickly go through to that chart over here. Where's this one over here? Oh, it's in the beginning. That one there. There we have it. In terms of their halving cycle, the halving cycle that's taken place, you know, a lot of the miners are unable to keep up with the rate of demand, the electricity costs, because remember, the equations become harder and harder to solve every 4 years, which means they have to put in more work, and they also have to upgrade their computers with faster chips. And as we know, NVIDIA stock is soaring through the roof because there's this lack of chips, right? And consequently, they are struggling, and consequently, they need to take profits, and therefore that affects price, driving price towards the downside, and it may mean that you need to go for a deeper correction. Now, what happens when you go for these deeper corrections is the blocks become a little bit easier to solve when the miners fall out, and consequently they can jump back in, and then you form a new base of support and prices go higher. So for now, it's still red. A lot of the altcoins are struggling. Look at those weekly gains pretty much being given up over there. And this is what we're seeing, right? There's evidence on chain. Miners have played a big role in the recent BTC price correction, selling 1,200 Bitcoin, which is about $80 million worth of Bitcoin, a pretty significant sell. Now, what you'll see when it comes to that miner revenue, it's something you need to look at. Following the halving cycle, which recently took place a couple of months ago, it's usually about 2 to 5 months after that halving cycle that price will start to go vertical. Now, the reason I wanted to start off with that very high time frame overview, which we just did, is because you need to understand that prices tend to go parabolic after the halving cycle. So consequently, you don't want to get too bearish to the point that you sell every single one of your long-term coins. Don't get flushed out in that regard, but consider taking profit on your leverage or shorter term trades, right? Because you could be going in for a much deeper dip. Now, we've been looking at this as well as from the hash ribbons indicator from 𝗕𝗢𝗢𝗢𝗓 Investments, which prints these buy and sell signals, also known as a capitulation signal. Now, we've had a lot of buy signals. It's been a long time. The last capitulation signal we had was the FTX collapse over there, which shortly after was followed by a buy signal. Now, if these miners continue to sell over here, this is going to start to cross down and you are going to get a capitulation signal. When you look at the standard deviation of the market value away from the realized value on price as per the MVRV score below, you can see though that price is, or at least the model kind of has it's oscillating right around the lower band area over here. Now, all your market cycle tops will come in the top side over here, at least the top quarter. Because of the diminishing returns, there's no guarantee that that standard deviation is going to differ so aggressively that it's going to move into the red zone. It may come a little bit lower. As you can see, each cycle, it diminishes, right? So pay attention to something like that. The point being is that if prices do come down pretty aggressively over here, and I've outlined the possibility that you could even come into the $45,000 region, and that's not something that many people have spoken about. Actually, that's something that I haven't seen anyone speak about yet. Now, if that does happen, as per these models, it still becomes a buy the dip opportunity. So it's something you want to look at. The fact that bulls have failed for 55 attempts of getting above the $69,000 region suggests that they're going in for a little bit of a deeper retrace. Now, we have a couple of key level areas along the way, which I'm going to bring up in just a moment. But as per this chart, you can see a strong level of support is going to be that $60,000 range low, which lines up with your 30-day moving average, longer term moving average, which has really held price up for the majority of these moves. So you really want to see as a bull that level get defended and hold. The fact that prices below the short and the medium time frame moving average suggests you're kind of in the middle of no man's land, and you might actually go in for that deeper correction. So if the trend is threatened, while losing the 50-day moving average, which is your red one over here, suggests that you could go in again much, much lower. And there are lower levels of support that we'll focus on in just a moment's time. But the problem is that that starts to threaten the overall trend. This is the super guppy indicator. Now, it's been really useful throughout this cycle, and I can zoom out to show you how and why, right? And we can go all the way back down to the bottom over here. So you can see the last time we saw extreme cases of red was the entirety of the bear market. This indicator held you out, right? You got a big push up, and as soon as it flipped into green and blue, that was your opportunity to go long from $20,000, and it pretty much held you in for the entirety. I had a little bit of a period over here that was a slump of red and a little bit scary. Now, if we do start to lose some of these key levels, I think you may see something similar to this, right? It's not bear market territory, but it's deeper correction. It's a deeper correction and a little bit of a scary environment. Here it flipped green again at $29,000 and held you in, chopped you out a little bit. You would have got long again at $42,000 and ultimately out again, back in at $65,000. And now this has the potential to start to flip down if prices don't bounce here off of the 50-day moving average. So something to look at. Some of the warning signs, some of the froth that we've seen, and of course this account over here, Korean DJ, says mass adoption. A lot of sarcasm in that tweet, but this is what we're starting to see. Look at the celebs coming in, and they tend to come in near those cycle tops, right? Now, I don't believe this is a cycle top, but I do think that there's a good possibility it's going to be a local top, and consequently you want to be very, very careful. Dan Bilzerian, still working on this shit. Need a bit more time to get it right, but I'll let you all know. He's talking about the coin that he wants to launch. Little Pump. This is the guy that tattooed Solana to his forehead. Who should I do spaces with tonight? I'm locked in. Let's go to the next one. Ryan Garcia, the boxer that seems to be losing his mind lately. So everyone is asking me to start a coin. Dylan Danis, coin coming soon. These are not good signs, right? In terms of what's happening in the market. Here's another one. Launching a meme coin, right? Ultimately wrecked straight afterwards. Here you have the guy that tattooed the Solana to his forehead. Of course, it's a mirror image because he's taking a picture in a mirror. But I mean, this is insane, guys. This is literally insane. This is the type of stuff that we're seeing. Here you have her with, of course, what's his name again? Forgot the inverse Kramer, Jim Cramer, right? You have her with Jim Cramer. You have Andrew Tate burning 40% of the supply of the Daddy token, which has already got a market cap of 110 million. And there you have them in the background. Look at these meme coin things in the back. It's crazy, guys. Very, very crazy. It's usually a little bit of a frothy sign that suggests that you may be going in for that deeper correction. So if you do want to learn more about these signs and symptoms, I discuss them at length, these types of things that you want to look for. Again, it is in Whale School. Use the link in the description below. By the way, about that link, guys, about the link, the reason why you want to use this exact link is we found that you want to click this one over here, Whale School, go to that exact one, click it. It will open this page. There are other sites out there that are attempting to scrape your data. So please, they know that you're a crypto-friendly person. That's why you're clicking on the link, or you Google searching. Don't Google search. Literally just use that exact link. Sign up over there so that they don't take your data, right? Okay, now, in the presence of this whole correction, we're seeing low volatility as well, right? Low volatility suggests that high volatility comes next, right? You tend to move through these ebbs and flows, low to high, right? We're in the low volatility period on the weekly time frame, but the daily has already showed signs of expansion as per the Bollinger Band with percentiles. So as this indicator moves towards the upside, the Bollinger Bands begin to expand, and you're in the midst of the next big move. Now, the problem is that price is moving towards the downside. So if bulls don't recapture key levels very, very soon, then that might start to expand on the weekly time frame. And if the weekly time frame expands towards, or this expands, and the Bollinger Bands open up, it means the move is happening. And then the move could be happening towards the downside if you lose the $60,000 range level. And then you're going to be looking down. As you can see, where does this line up? Remember, based on the expansion, the Bollinger Bands are going to open up like that. So $45,000 becomes a possibility for Bitcoin reaching towards that lower band. Now, hopefully bulls strike back, and hopefully the celebs don't get flushed yet, because I know a lot of you are still very, very long. But for the whale the whale room community out there, we've already warned them of this over a month ago, right? So most of the guys in the whale room are pretty well prepped over there for what may come next, and they prepped to buy the dip should that come. Now, in terms of corrections, we're 93 days into the correction, having had one of the longest corrections, right? Now, you could still expand towards the downside, but let's see. The levels are clear to take out. For now, it's better to remain cautious. It's better to remain defensive on price action until you can break above this range level, which is what I showed you on that high time frame weekly chart. That's what we're looking at over there. And it's pretty clear. This is the lower time frame plans that we've been following, all right? We looked for price to pull back down here into the fair value gap. You can see over there, the fair value gap is an inefficiency candle. We're looking for a bounce off of that. And then we'll see, do you bounce and reclaim the mid-range level, or do you reject from that mid-range level? If you do reject from that mid-range level, it's going to be pretty bad, and you're going to have rapid expansion into the range lows. And that's going to be the last line of defense where we want to see bulls hold price up. Failure to hold that up means that you're going much, much, much lower. So understand what you're working with over here in terms of the ranges. I personally think that the ranges are one of the most profitable ways for any of you to trade or learn how to trade. Practice marking out those range highs, range lows, and the mid ranges. Why? Because price spends the majority of the time within these phases, right? You can short the range high, long the range low, short the range high, long the range low. Look at how many trade opportunities you get over here, and you can take some of your profits in between in case you don't reach the extremity. So if you went long here, you would have taken some profits there, left final profits for the range high. At least you've exited the majority of the position and you've raised your stops into break even. So again, we do teach more of this where, of course, in old school.
Range levels work all the time, especially on new tokens. When you're looking at a brand new token that's only been around for like 8 weeks, 12 weeks, forget the trends. Trade it as a range. Long the range low, take profit at the range high. You break out above the range high, hold it as support. You know that you're starting to open up a new range level. Remember, the trend is made up of multiple ranges, multiple blocks of ranges. All of that combined is a trend, right? And if you want to be a short-term trader, you don't even need to look at the trends ever. If you want to be a trend trader, then you look at the trends. If you want to trade the market 70% of the time, then the market range is 70% of the time. This is just the nature of the market. The trends are very, very short-lived.
Okay, I did have that on 2x speed, so I do apologize for any of you out there. I hope that you managed to grab all of that. Point being over here is you need to learn and decide what type of trader you want to be. Do you want to be a range trader, or do you want to be a trend trader? Do you want to be a scalper? Do you want to be a mean reversion trader? There's so many different types of trading, and in whale school, I literally try and give you every single one of the tools that you need to determine which type of trader you want to be. You got the full suite over there, and then it's yours for the picking, right? You choose which one you want to be and then specialize in that. Most of the people that become very, very wealthy in life became wealthy not due to extreme diversification in the early stages, but extreme specialization. Once they made their money, then they go out and they start to diversify. So it's the same in trading, right? Crypto is a business. Choose which type of trader you want to be, specialize in that, and absolutely milk it, make your money, right? So in terms of those ranges, again, you can see, we can also have a look a little bit deeper into what's happening, in the order book over here. And you can see over here, we've marked off on price-wise where that range high is. Price is being capped every single time at that level. And then we can also have a look at the open interest. Now, every time the open interest pushes into that level, it tends to flush towards the downside. So the open interest has picked up once again, starting to get higher and higher. But look at where price is now. Price is lower, right? Open interest was down here. Let's change that on to be a little bit brighter and bigger. There you go. So open interest was down here. Where's open interest now? It's up here. Where was price then? Price was up there. Where's price now? Down here. So ultimately, what is going on over here though? A lot of the open interest that's building up is short. So you have to be careful of that, right? Because which way is this trending, right? The CVD, the cumulative volume delta, has been trending down. If you look at the spot has been selling off. What does that mean? Well, there is a little bit of hope over here. The hope is that price moves into the $63,000 fair value gap. Open interest continues to pick up in the form of shorts. Why? Because we can see over here that it's mostly shorts right now. Then spikes down, flushing the shorts, creating a short squeeze. Open interest comes back down, rebuilds up, longs start to open up. That's what we would like to see in the short term. That is one of the hopes, and therefore you can start to push up and target that liquidity at $72,000. And then the question is, do you hold there? That's the short-term plan. You can see over here, if you look at the CVD in terms of this viewpoint, you can also see over here extremely negative, right? 584,000 actually worth of shorts, which could be liquidated at that exact level. And currently the ratio of shorts to longs is a 5-to-2, right? Or at least a 4-to-1, right? 533 short liquidations versus 178 long liquidations over there. And you are starting to see Ethereum find support. This was the trade that I was looking for. These lot lines were drawn all the way back here when the liquidity was up here. I said I wouldn't be buying. Wait for the sweep of the liquidity and the move back down. We drew the lot lines in, and so far the lot lines are playing out to pretty much perfection. That is on ETH USD. You're getting a bit of a move, so that brings a little bit of hope that you might see a quick short squeeze within the market. And then the question remains, on that short squeeze, do altcoins outperform? And the other question is, does Bitcoin hold up against that key mid-range level, right? Does it reclaim or reject? If it rejects from the mid-range, you're going back down again. So something to be cautious of, something to watch over there. Ultimately, this would be a trade opportunity with stops now below, of course, that level. I think the last show that we did, we said that we were looking for ETH to move into the $4,300 region, and now we got a low into, or at least not 4,300, 3,300. We got the low that came in here at 3,363. So I would consider that level officially hit. We can get into some of the altcoins. Drop your requests over there, and we can have a look. Let's quickly check the comment section over there. Somebody brought up the moon phases. I definitely think that's something noteworthy to look at. This is why I think it's very important that bulls defend this range low level. If they can hold up this range low level before the next bull moon prints, and for anyone new out here, you might think we've absolutely lost our minds, but for the rest of the audience who have been here for quite a long period of time, you guys know it. It works phenomenally well, and measured out, your bull moon's going to print on the vertical line that I have over here. So let's see if bulls can defend price action, maybe have a slow grind down into the fair value gap, and you slowly start to bounce off of that level just before the 21st of June. Then you might see the opportunity for a major high low, a big breakup over here, and hold that level, and then continuation higher above the mid-range level. You'll have a lot more confidence to go along with in that particular area. So, but more on that again, guys, in Whale School. Use the link in the description below. It is entirely free. And for those of you who want to take your trading to the next level, you want something above and beyond Whale School, well, remember, you can come into Whale Room. This is where we drop all of the various different alpha, all the charts, daily updates, every single thing that we're looking at within the market. Of course, we have a lot of profit over here. That trade, I took $8,500 profit. And of course, it's not just me. If you go through into the various different sections over here, there's DJ chat, trading chat. You can chat with other like-minded people in the community over there. Everything that you need is over here. You even have the easy algo indicator, which is being dropped now and then. The DJ calls, the community voted this actually one of their most profitable sections. We ran a massive survey, and the community said this is one of their most profitable sections when it comes to trading. And then, of course, you also have Mo over here, which is dropping an enormous amount of scalp trades, and that was about a 50-50 split between where the most money is made between the DJ section and between the scalps, which is mostly Mo that's responsible for those scalps over there. So if you want more of that, it is also, the link is in the description below. And then let's continue. Okay, what have you guys got over here? Let's have a look. Injective. Let's have a look. What I'm going to do is I'm just going to have a quick run through on the layer ones, right? Because the layer ones typically move first within the market cycles. So governing the health of the layer ones is very, very important. Now, you can see it's kind of choppy, right? In the middle of nowhere, he has Cardano. Cardano could very, very well sweep below that order block, which is over here. Let's quickly mark it off. You can see the order block there that led to the big move up. I think good chance that you come back down into that zone, which would be a 33-cent Cardano. That means a move from there to there. Still possibly another 20% down. We have a Ethereum, right? One of the newer coins that has already hit the level of interest. We did get a bounce over there. Again, watch for this zone to hold. Theoretically, you have a pretty big move over here with a market structure break, right? You have lower highs, and what do you have now? Boom, big move up, higher highs, price comes down. If it can hold that as the first high low, that opens up the trade opportunity. Okay, Aptos, we said not looking good. It's going to bleed down probably all the way into this area at $5. So watch that level over there. Atom, how's Atom doing? Okay. All right, Atom also coming into key support now. So the good news is that a lot of these coins are coming into key support. The bad news is that some of them are losing key support, and that means you have to look down to the next level, like AVAX, right? If AVAX loses this level, you're going to trade it all the way back down to under $20. It's going to be about $19.60. I think you're going to sweep that region over there. Cake, let's see how's Cake doing. Okay, losing support, not good. Losing support over there. Okay, a little bit slow in the transition over here. The internet must be lagging. Mid-range for DOT. Polkadot coming into mid-range. Injective. Somebody asked for Injective. Failed that level. Rejected. Big trap scenario for a lot of breakout traders that were trying to buy the breakout of this level over here. Immediate stop. Reversion back to the mid-range. Look at $24.50 as a support area where you might get a little bit of a bounce. Don't mistake the bounce with a reversal. It could lead to a lower high. Rejection over here. You might see something like this. So just be careful of that, right? A move down. Big move up, lower high, and then you still could come into that zone. Alternatively, if you hit the mid-range, hold above that. That does open up a long trade to the range high. And if you can get and hold above that range high, great. Trade it to that level and then all the way up to that level. So it's going to be 30, then 36, and then 44. Those would be the zones that I'm looking at. Casper. Okay, middle of no man's land, caught in the mid-range over here. I wouldn't really touch it unless it got down into this zone. It's one of our top positions. We a long-term holder on something like Casper, right? Casper is one of our long-term holding positions. MATIC, I would only get it if it comes down into 50 cents, right? Near. Let's see, near. Okay, still retracing, right? We're looking for a move down into the 50% level. This is this zone over here. That's 50% of that wick. So $4.60 is the target for near. Say, okay, coming down, rejection, going through a distribution phase over there. Solana hitting the mid-range level. It better bounce from here. Otherwise, it's going down into 120 to be realistic. I think that you should get a bounce from here. The question is, does that bounce lead into a lower high, right? If you bounce into there, reject off 160, there's going to be profit taking, and then you're going to see something like that. Alternatively, if the whole market starts to turn, you could spike back up, and then you can consider this a bear trap and another bear trap. But that entirely depends on what Bitcoin does, right? Okay, Sui has lost the key level. Therefore, this becomes resistance at $1, and you'll be looking for a move down into the mid-range level. I'm not so sure you're going to hit the range low. I think that most likely you come into the mid-range, which is going to be about 80 cents, and then you start to bounce there. TON has been one of the stronger coins. Is it still strong? That's the question. Let's have a look. Is TON still strong? Very, very, very strong, right? If you see a major pullback, a strong dip on something like TON, I would be buying it. We only in Whale Room, we only got one order in, right? It was this one over here. One of the three we're looking to scale in on the way down. We only got that one filled, and price is up pretty significantly since then. So if you took that trade, you would be up 66%. ZETA, okay, losing the key level, not good. Let's have a quick look at the layer 2s over here, see what's happening over there. Arbitrum about to come into support. Supporters at just under 80 cents over there. METIS. Okay. METIS. Oh, METIS hit our level. Okay, that was quick. Okay, hit the level, but no reaction. So it's a no buy, right? You only buy it if there's a reaction. If you start to see a reaction off of that zone, it's lost that level. What I'd be looking for now, I'd be looking for the reclaim of that level. Otherwise, yeah, that's it, guys. Reclaim of that level. Otherwise, just wait for lower. Wait for prices to come lower. Optimism. Okay. Also, middle of no man's land. It is kind of caught at that mid-range level, but it's not a good buy in my opinion. I would leave it. Stacks trades at a higher beta to what Bitcoin is. It lost the level. This was the zone it needed to hold, which was the yellow box. Failure to hold that. Watch for the move all the way down into 127. Let me know what else you guys want. Please let me know what else you want. Let me know in the chat section over there. Okay, while we wait for those requests, guys, I do want to remind you as well, if you do want to join into Whale Room, that is the private group. The link is below. There's a whole lot of alpha over there. Of course, the people are making huge profits. The survey suggested that 80% of everybody in the Whale Room is making huge money off of the calls. A lot of the guys in Whale Room are big account sizes, though. So, you know, of course, guys, if your trading account is $100 or $500, I'm going to be real with you. It's probably not for you. This is for bigger players out there, but you're welcome to join, right? You're welcome to join. So use the link in the description below. Okay. I'm gonna take the altcoin requests, guys. I'm gonna take the altcoin requests for the next show. Drop them after this show in the comment section, and I'll look in the comment section for Monday's show. Have an absolutely stellar weekend. Thank you all for watching, and I'll see you all then. Cheers for now.